Welcome to the Deep Dive. Today, we're diving into, well, a real giant, the Brazilian iGaming market. As of January 2025, it's officially regulated, controlled. We're talking Latin America's powerhouse, right? 215 million people, legalized online betting, casino games. It's huge. So our goal here is to cut through that hype and give you the real picture, the financial risks, the tough regulations, and what that massive prize actually looks like for operators.
Exactly. And what we've done is pull all this from the latest country report by our team at Gambling Databases. Just so you know, we're a research group, and our whole focus is delivering these really in-depth, data-driven analyses of the global iGaming scene. So in reports like the Brazil one, we dig into regulations, tax, player experience, what it's like for operators, new trends, everything. The aim is always to give you a clear understanding, backed by data, of how gambling works in each specific place, like Brazil, and what makes it, unique.
And Brazil is definitely unique. I mean, the numbers alone,
Yeah.
81% internet penetration, an adult population around 160 million. That scale is just enormous for a newly regulated market.
It really is.
Plus, you've got that incredibly passionate sports culture, mostly football, obviously.
Yeah.
You can see why the big operators are so interested.
Oh, the potential is absolutely there, no question. But the interesting thing, the real story here, is the contrast, the duality.
Okay.
We actually scored player access really high, 8.5 out of 10. It's fully legal, safe for people to play.
Okay, that's good for players.
Right. But then the operator ease score, it's only 6.3 out of 10. We classify that as moderate. And it's not because the rules are fuzzy or anything. It's because the financial hurdles and the regulatory ones are just exceptionally high.
Okay, that makes you wonder, doesn't it, about the regulations themselves. That license fee, our $30 million, that's roughly $6 million US dollars, right? For 5 years.
Yeah, that's the number.
That's got to be one of the highest entry fees anywhere in the world.
It is. Right up there.
So is the SPA, that's the Secretariat of Prizes and Betting, under the Ministry of Finance, are they just trying to rake in cash? Or is that price tag more like a filter to control who gets in?
It's absolutely a filter, no doubt about it. I mean, yes, they've legalized the main things, sports betting, online casino, horse racing, but they've deliberately built this massive toll gate, effectively. They're clearly signaling they want the big, established international players, companies that can promise serious compliance, long-term commitment, not the fly-by-night outfits. So that $6 million, that's really just the starting point.
Right, just to get in the door. So what's the actual realistic minimum an operator needs to have ready? Like total initial outlay?
Realistically, you need to be thinking more like 7 to 8 million US dollars minimum, because you've got a license fee, sure. Then there's another R5 million, that's about $1 million US dollars that you have to lock up. It's a financial reserve, sort of a compliance guarantee.
Okay, so that's $7 million already.
Yeah, and then add first-year setup costs,
Yeah.
operations, getting things running. That's probably another $500,000 to maybe $800,000. So you need all that secured before you even start thinking about marketing budgets or signing up your first customer.
Wow, that is a serious chunk of upfront capital. Okay, let's shift to actually running the business there, the operational side. Taxation.
Yeah.
Because this sounds like where it gets really tough, especially for anyone who isn't huge. You mentioned severe margin compression. What's the bottom line, the effective tax rate?
Yeah, the effective tax rate, honestly, this is the number that probably stops most mid-size operators right in their tracks. The main gross gaming revenue tax, the GGR tax, is 12% right now. But there's already legislation pushing that up to 18%, probably by October 2025.
18% GGR.
But wait, that's just the GGR tax. You have to stack corporate income tax, CIT on top of that, plus various social contributions, plus municipal service taxes because you have to have a local office. You add all that up, and the total effective tax burden on the operator hits somewhere between 50 and 60%.
50 to 60%, just to put that into perspective for everyone listening. In mature European markets, the UK, Malta, effective rates are often more like 20%, maybe 30% tops.
Exactly. It's a different world.
Hitting someone with a 60% effective rate, that fundamentally changes the whole business case, doesn't it?
It does.
You're basically forcing operators to be purely about volume, about scale. They need way, way more players just to break even.
Precisely. It becomes a scale game. And only the real giants can afford to play that kind of game long term. And the hurdles don't end with the money. Operationally, you have to set up shop properly in Brazil. Headquarters, admin, hire qualified local people. But probably the trickiest structural bit, it's the mandatory local ownership rule.
Ah, yes, I saw that. That part seems, well, strategically fascinating, but also potentially really complicated. Foreign companies can't just go in on their own.
Nope. Can't do it.
They must find a local partner, and that partner has to hold, what is it, a minimum 20% stake?
Minimum 20% Brazilian-owned shares. Mandatory.
What kind of risks does that introduce, having a mandatory partner like that?
Well, it adds significant risk on several levels, really. First, just basic governance. Giving someone 20% means they have real influence on decisions. Aligning global strategy with local market demands, that can get messy.
Mm-hmm. Potential for conflict there.
Definitely. Second, you've got IP concerns. Intellectual property, you're essentially sharing your proprietary tech, your operational methods with this minority partner.
Right.
And third, just finding that partner. You need someone trustworthy, compliant, ideally experienced. The due diligence process alone is a nightmare. It can take months easily. And that just adds more delay to the already long application process.
Right, so you're already looking at, what, 8 to 12 months just for the application, background checks on directors, getting the tech certified by labs, all while trying to structure this complex partnership.
Yep, it all adds up.
It certainly sounds like the SBA, the regulators, taking enforcement seriously, too.
Oh, they are. It's complex, yes, but it's meant to be a tightly controlled system. The SPA is actively blocking unlicensed sites, hundreds of them, blacklisting IPs, and they're not afraid to use fines, big ones, up to our $2 billion for illegal operations. They are definitely clearing the path for the licensed players, the ones who pay that hefty toll.
Okay, so let's flip it around. For the operators who are willing to cough up that $7–8 million up front, and who can somehow stomach a 50–60% tax rate, what's the big prize? Why is Brazil still so compelling?
The draw is the growth, pure and simple. The market forecast is projecting a KGR compound annual growth rate of somewhere between 18 and 22% through 2028.
Wow, 18–22% growth.
Yeah, that's expected to bring the market value to around USD 4.1 billion by then. That's world-class growth potential happening within a fully legal framework.
And the players themselves, they seem perfectly geared for this, right? That football obsession means sports betting is huge. You said 55% of active users.
That's right, it leads the way. Online lotteries are pretty popular too, around 32%, and then casino games at 28%.
But the underlying tech, the digital infrastructure, that seems like a key piece too.
Absolutely. You have to remember Brazil is deeply, deeply mobile first. Smartphone penetration is like 92%.
Incredible.
So players expect slick mobile interfaces, they want fast payouts. But the real killer app, the thing that gives licensed operators a massive edge, is the local payment system. PIX.
Right, PIX. We hear about it all the time in our reports covering Brazilian e-commerce generally. How vital is it specifically for iGaming there?
It's not just vital, it's foundational. It underpins the whole modern iGaming experience in Brazil. Get this, PIX handles over 53% of all online transactions in the country. That's an astonishing figure globally.
53% through one system.
Yeah. So for gambling operators, this means instant deposits, instant withdrawals, almost zero payment friction. That slashes player churn and drives conversion rates way up. Honestly, if an operator can't integrate PIX smoothly and effectively, they just won't be able to compete, period. It's that instant trusted payment flow that really builds player confidence, too. That's a big part of why players feel safe, why we gave it that high 8.5 player safety score.
And it helps players, too, knowing they're covered legally. No criminal risk using licensed sites. And taxes on winnings, there's a 15% withholding tax over certain amounts, right? But the operator handles that.
Correct. The operator calculates and withholds it, so it's clean for the player, keeps them fully compliant without hassle.
It seems the government really thought about creating a secure space. You mentioned strong KYC, age checks.
Yeah, robust KYC and age verification are mandated. Plus all the standard responsible gambling tools, self-exclusion options, mandatory deposit limits, loss limits. It's a controlled environment designed for consumer safety alongside state control.
Okay, so let's try and bring this all together. This duality seems key. On one hand, you've got this enormous, fully legal market, amazing growth forecast, players who are digitally savvy and engaged. But on the other hand, the cost of admission, the capital needed, the ongoing tax burden, it feels like it's deliberately designed to weed people out. Only the biggest, most committed players need apply.
That's exactly it. And this is where we hit the reality check part of our analysis. You take that $7–8 million entry cost. You factor in that brutal 50–60% effective tax rate ongoing. What does that do to your ROI? Well, our projections show an expected return on investment timeline of minimum 36 to 60 months.
3 to 5 years, just to break even.
Minimum. Realistically, you're looking at a 5-year-plus investment horizon before seeing significant returns.
Yeah, kind of time frame demands serious institutional patience. So let's summarize the verdict. Who specifically should be seriously considering Brazil right now?
Okay, bottom line. This is only for major International operators, the ones with really deep pockets. We're talking companies that can comfortably earmark, say, USD 10 million, maybe $15 million, plus just in available capital to get started and sustain operations.
Big money.
And money isn't enough. They need proven experience. They need to have successfully navigated other complex, highly regulated markets. You know, if you found Spain or the Netherlands tough, Brazil is likely going to be even harder.
Right. Experience counts.
Critically. And finally, they need the strategic capacity, the resources to find, vet, and manage that relationship with a trusted local partner for the mandatory 20% stake. That's non-negotiable.
And just as importantly, who should steer clear? Who should absolutely not be looking at Brazil?
Definitely startups, smaller operators. Anyone whose business model relies on a quick turnaround, hoping for ROI inside 18, maybe 24 months, forget it. If your finances can't comfortably absorb that 50–60% effective tax hit while you're also spending heavily to build player volume, the market dynamics will likely break you. The combination of high capital requirements and that ongoing tax drain just makes it financially prohibitive for smaller players or anyone without a very long-term view.
So maybe a final thought to leave you with. Brazil seems to have paved this wide road to a massive regulated market. But they put up a very expensive, very exclusive toll booth right at the entrance. These regulatory hurdles, they aren't just red tape. They feel like strategic gatekeepers, deliberately ensuring that only the really big, resilient long-term players get to enjoy the spoils of Brazil's huge gambling appetite.
And that's the kind of clarity we aim for at gambling databases, providing that data-driven understanding to help navigate these complex, high-stakes markets like Brazil.
Absolutely. For the complete analysis, including much more detail on the specific regulations and our full financial modeling, you can find the full country report on our website. That's gamblingdatabases.com.